there is currently a 25% gain opportunity that we have here on chart. What is going to happen next with Bitcoin? We will be outlining here in this video. What we're going to do ourselves with our trades, we will also be talking about. So make sure you watch the entirety of this video. To reason all of this, we will use, of course, as always, Elliott waves, the liquidation heat map, and some more in-depth data. I will explain all of this in today's video. So let us start right into it with the structure. Again, same as the past videos, we think a wave 3 has topped on the 17th of December or around this time. And since then we have seen, let me draw this on the chart, an A wave to the downside, B wave to the upside, C wave to the downside. And now we have a new scenario on the chart. This was not here in the last video. Well, what is it? It's this 1-2 scenario. This could possibly mean that we are in this wave 1, and next we will see a wave 2 and a wave 3 to the upside, and of course wave 4 and 5 will follow. Now, does that mean that this wave 4 is completed or not? Whether that is the case, we will look at in this video, because that basically means whether we get a chance to buy here or if we have to buy at around this price. And also what we're going to be doing when we have our long positions, we will outline that in this video. First, looking at the liquidation heat map. Make sure you watch this video to the end, by the way. I promise it's going to be worth it. Looking at the liquidation heat map, we can see that in this ABC correction, if it's finished or not, we will get to it later, of course. In this, what we presume for now is the ABC correction, we have liquidated this big block here, but we still left this big block here. And of course, between 80 and 70,000, there's also so much liquidity. For now, we don't think that's going to be touched. Let us look at what is happening exactly here. And this is important. Ever since we've seen this spike up, always below price, below price, below price, there's been a lot of liquidity buildup. Compare this to what we see here or here or here. I mean, just look at it in the ways of the colors. If the colors are the same, it's the same amount of liquidity approximately. The more greenish or yellowish the color is, that means the more liquidity there is. And you can see there is so much liquidity building up just below price all the time. We can look at this on a smaller time frame. Let's look at the 2-week instead of the 3-month. There is so much liquidity building up here, and that is not necessarily good, because that means market makers have an incentive to push prices down. I talk about this in every single video. Market makers have an incentive to push prices down, to liquidate all of these people who have bought here, and that is just a sign of the market being over leveraged. By the way, if you're interested in learning about all of this, we have a full-on trading transformation system and things like weekly live market analysis available on our website. That is the first link in the description if you're interested. We also explain the heat map here and also how you can use it to your advantage. We also explain things like market makers and why they have certain incentives to, well, let's say manipulate prices, a bit of a hard word, but push prices in certain directions. So yeah, liquidation heat map, what can we take from here? That prices are rising, of course, and taking out a lot of leverage above, but there's also coming in a lot of leverage just below, which could mean that we are starting to overheat. Now, let us look at this data, which is basically giving us a more in-depth analysis on whether we're going to heat or not. Let's look at this from this local low, what has happened the 16th of January, basically yesterday. Prices have risen. Open interest is the total number of leveraged contracts in the market. That basically means shorts and longs combined has also risen. So price rise, long and short increase, rise. This again, open interest doesn't tell us whether longs or shorts increased more. For that, we have to look at the funding rate, and we can see, let me just draw a line from the same point. Funding has, even slightly, but funding has decreased while open interest increased. What does that mean? That means a lot of new shorts have entered the market and not longs. Longs are actually, well, decreasing in the amount of longs. Not significantly, but compared to the open interest increase, it is significantly. Why is this relevant? Well, that means that it's basically a very bullish sign, because it means prices are pushing upwards, and we can see on the heat map there is a lot of things happening below and a lot of people going in, but what we cannot see on the heat map is the prices that are up here, and it seems that a lot of shorts entering the market, which is good because, again, that is incentive for prices to push higher and liquidate even more people and, well, maybe cause a liquidation cascade, and liquidating shorts typically happens by prices increasing. So this basically shows us there's an incentive for prices to go higher, or a reason. And by the way, this also sort of course, it's not financial advice, by the way, it's just our opinion, but this also shows us that the market is not necessarily overheated. Looking at spot volume, this is sort of an interesting one. Let me put it in the same point. Spot volume, basically nothing happened. So, well, let me expand this a bit because it's a bit crushed, but yeah, spot volume, nothing happened significantly. That means that this is largely driven by contracts, which is not a good sign for a sustainable pump. But for now, I think we can say that I think it's still okay. Of course, I would still be careful with this because this pump is sort of a bit iffy. But looking at now what we think exactly is going to happen next to price. And first of all, is this ABC correction finished? Question mark. Well, we've outlined this in the last video that there is definitely a potential it has already finished. This support box was still in the last video. I sort of made it a bit smaller, so it's just easier on this chart to see what's going on because there's a lot of things happening. This is about the size of the actual support box, and we dipped into the support box. So yes, we could be complete with this ABC move. Would I prefer seeing one more move down into this area? Absolutely. Is that possible? Yes, it could be. That we've seen an A wave down, an overshooting B wave now. Well, it's not overshooting, that's the wrong term. A high B wave, and we will still then possibly see a C wave, which is going into this box. Now, what is the scenario which is looking more likely right now? It's this 1, 2, well, basically 1, 2, 3, 4, 5 scenario. And how are we going to judge what levels are we looking out for here? And well, what are we paying attention to here? It's basically the hypothesis is that this is a wave 1 we're currently in. We will see a wave 2 to the downside, and this is where the real value lies, because in our strategy at least, buying at the low of a wave 2 is an amazing value. Well, it's amazing risk opportunity because you know an ABC has finished. You're not buying at the bottom because, well, if you buy here at the bottom of the C wave, the potential that it just goes even lower here is very high. So risk is not low. However, if you have a confirmed completed ABC structure and a confirmed completed 1, 2, 3, 4, 5 to the upside and an A, B, and then C, and you buy in that C, that is just the risk is just way lower compared to if you buy in this C. I hope you understand. Of course, if you have any questions, feel free to ask them in the comments or write us an email. Now, what prices are we looking out for? The support box here is on the chart. We will be buying. We have long orders. We had long orders waiting down here. They did not get filled, which is fine. We have new long orders waiting here in this support box. And we're basically watching for prices to enter the support box, fill our orders. If we sustainably break below 92.7K, this is where our stop lies. If we go to this area, we will close those positions because then it is more likely that we will see a wave C still to the downside. If we don't sustainably break below this and hold above it, then we think a wave 3 is going to happen and we will see some exponential growth to new all-time highs. That's basically all I have to say for today. I think it was a lot of information. If you liked it, please do check out our website. It's the first link in the description. And I think I will see you in the next video. Bye-bye.